Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so here we have our Bitcoin chart. I'm looking at Kraken. This is the 4-hour right now, and I'm going to take you into the chart matrix real quick and kind of give you an idea of what we're looking at. I'm going to leave it on the 4-hour, but we're going to do like a real broad view of it. So we're essentially inside of this fib channel after we peaked out back in July, and we've been just selling off, basically just oscillating inside this channel. We finally got the breakout and moved up here, and then we put in essentially like a topping pattern, head and shoulders, sold off and got that massive dump down here. And then when we came down to the bottom, we essentially like bottomed out. Maybe too soon even, I'm not sure. I mean, there's a lot to be said about that. We'll see. But basically, we came all the way down to the dark blue line of the fib channel, which is the 1.618 extension for like the breakout of the channel, consolidate at the bottom, and then finally we were able to break back into it. And we came up to like the halfway point, and then we essentially have been putting in like this wedge pattern. Now, if you look at it like this, where this purple is the top of the wedge and the orange line is the wicks here, and then the green is the slope of the wedge, but the blue was like the initial slope, like the parabolic trend line. So when we basically like started moving up and forming out like this wedge pattern right here, we started bouncing between it. So we had one touch, then one on the top, then we came halfway, then another on the top and another on the bottom. So now we have two on each, but we have a fairly large gap right here, which isn't ideal, but it's acceptable. And then we have now, after those two, we come back down a third time, come back up a third time on the top, and now here we are essentially getting like the confirmed breakout of the top. But if you go by the wicks here, we essentially came up to the top of the wicks. Well, first we got like the little measured move of the triangle we were talking about, and it actually broke to the upside and took out our shorts and basically uncovered our spot positions here to capture this move. And now here we are at this line. We're basically filling out this pattern right here, breakout, and then we topped out on the distribution pattern here. When we were selling off before, this was like the broadening wedge that we have been trading the whole way down here before the capitulation move. And now we came back up and found resistance on the bottom of the broadening wedge, and then broke through and found support on that same broadening wedge line. And then inside this pattern now, here we are, not all the way at the top of the red broadening wedge line. No, that's the one everybody else is looking at. We topped out at this one, which is the slope line. Basically what happens is the slope is this broadening wedge right here, and then the slope starts to accelerate. So this is the accelerated slope line inside the broadening wedge, and then you would draw like another one right here. And then when you break out of that one and come down and confirm, you're essentially breaking out of the pattern. Like, you know, you get like the stronger move at the end of like a move down or a move up. And then when the last buyer buys or the last seller sells, you know, you start, you know, obviously seeing like the retracement of like the powerful move. So now here we are basically running into that line and topping out, and that actually lines up perfectly with the 377. But you'll see we basically came up here, floated for a minute on top of it, and then now we're selling back off inside of it. So what we need to pay attention to right now, the most important thing is inside of this distribution pattern, inside of this distribution pattern, inside of this distribution pattern again. So that's like a triple distribution pattern. Here we are topping out at the top. So if we come down here, we need to find support on this purple line. If we can find support right here on this purple line, which is the top of the 4-hour confirmed candle close ascending triangle that we've been watching this whole time, if we can find support here, we'll get the break, confirmation, like retest, confirmation, and then continuation. And then we can get our actual measured move of this pattern, which I would expect us to basically come up now to the top of this pattern here, which is, that was our initial parabolic trend line for like the initial slope. And then when we break through that, we'll find support and create this second one, and then we'll often retest the previous one. So if we're going to come back up here, we could potentially retest the previous one, retest the top of the distribution zone. Now we may not make it straight up here. We're not just going to get like a massive move up. You know, it may be like further down in here. It may be over here. I mean, you never know exactly what's going to happen. You have to kind of keep an eye on price action, obviously. But we may top out right here, come down and immediately sell through. We may top out right here, like I said, find support and then get continuation to the upside. We have to watch that and you know, trade accordingly, obviously. But at this point in time, I mean, you know, overall it's a bearish trend, but the market has been showing strength this whole time up here. So as long as this green line continues to hold, this second parabolic trend line, you know, we're going to continue trading that line basically. And as long as this red parabolic trend line, the initial one that we had, you know, continues to hold as resistance, you know, obviously we're going to continue, you know, selling that one or taking profits or covering our spot positions, you know, as we approach that as well, like we did when we nailed that that previous short that we put in right over here. So basically, you know, just to give you guys an idea of what I'm looking at and everything. But again, now look at this whole pattern, this fib channel that we were inside of. We did break above it, you know, and then broke down below it, and then we came back up. Once we were back inside of it here, we've been moving around inside of it, and now here we are at the top of that pattern again. So now if we do come up just a little bit higher to like that 7,600 range, that's going to put us at the top of the channel again. So what I would expect to happen right now is, you know, bar a change of, you know, basically behavior, is I would expect us to essentially start trading back inside this channel again. You know, there's no reason that it wouldn't. Essentially what happened is we're trading inside this channel. Whatever event or activity or market or, you know, whale, whatever you want to call it, whatever happens that breaks us out of this channel was not strong enough to maintain it. So then it sells back off, and then so powerfully it sells off that it breaks back through it on the downside. And then essentially what happens is we find our median, our middle ground again. Look where we are. You know, we come all the way back into like the middle of the channel, and now here we're testing back to the upside. Next thing that's going to happen, we test back to the center, and then most likely test back to the downside. Now in the event that we do break out, you know, the most reliable form of breakout is, you know, a break and then a retest. So what we would be looking for if we did break out to the upside is we'd be looking for an initial move up here, come back down like a retest inside this, and then continuation. And then, you know, the real substantial area to get above would be basically like coming back and getting above this, and then, you know, getting that continuation above like that long-term green trend line that, you know, we pointed out in so many of our videos. So but there you have it. I just wanted to do like a quick little like deep dive into you know, like the combination. I call it the matrix, but essentially it's like the chart matrix of like all the different patterns and resistance support that has like played out. And obviously, you know, this is more of an advanced level of technical analysis. I do prefer to, you know, use like moving averages and horizontals and stuff like that. But as you'll see, once you start getting like these advanced levels and, you know, getting like figuring out exactly how to draw diagonals correctly, and you know, look at what other people are looking at and use like Fibonacci's and you know, confluence and everything, you're able to actually use these in a reliable way. You know, as you can see from my technical analysis and everything is not based on specifically like one thing, but there are like weighted amounts that I give each like indicator, or, you know, each like trend line, for instance. So I'm always going to give like a higher weight to a horizontal trend line than I am a diagonal trend line. But that doesn't mean that I'm just going to disregard a diagonal trend line or not use it, because I know for a fact well, that I profitably trade diagonal trend lines, and I know for a fact that plenty of other people do as well, not only in crypto markets, but you know, traditional markets as well. So and channels and all that stuff, you know, it's just basically a different way to look at the same thing. So but you see what I'm looking at now. You know, the idea is basically, you know, are we going to break out of this ascending triangle, like confirm, and then, you know, get continuation to the upside? Are we going to get the fake out breakout and then sell back off to the downside and retest the bottom? You know, now that we're forming essentially like a broadening wedge, an ascending broadening wedge inside of this other pattern now, you know, it's like, is that going to happen now? Are we going to get the break to the upside and fake everyone out and then come back down and test the bottom of the broadening wedge and then see where that goes from there, down, up, who knows? I mean, there's a lot of uncertainty in this markets right now. All I know is that, you know, you're definitely at a huge advantage, I think, in these markets, to have basically like cash and liquidity. Because what I suspect is going to happen very soon is, the liquidity is going to dry up. They're providing liquidity in certain spaces, the Fed is, but it doesn't always have the desired effect that you'd think it would. So I'm still very skeptical of any moves to the upside in any of these markets, and still consider them to be essentially just like, retracement rallies off of the overall, like, impulse to the downside. And at this point in time, I'm expecting continuation to the downside, in all markets over time. You know what I mean? I'm not just like blindly shorting it and walking away, but I'm very skeptical that this is just it, and it's off to the races, headed to the moon. I think it's very likely that with the halvening coming up, we're likely to see like a buy the rumor, sell the news type situation. So everyone is getting very bullish and talking about the halvening fast approaching, and I think likely we will see a sell-off leading up to the halvening. And again, in traditional markets, we're basically at like those golden retrace levels, like, well, starting to, depending on what asset, essentially. We're at those golden retrace levels. Now you have to understand with the stock market, that a lot of like the indexes and everything, like, when you're looking at like 500 companies or thousands of companies or whatever, some of them are not going to have like bullish retraces on like this massive leg down. So, I would expect a lot of them to top out at like a 236, as where, some of the stronger, assets you may see get up to like the point 0.5 or even the 618 golden retrace zone. But I think most assets are going to be like 236 or somewhere around there. Maybe like, I don't even know. I mean, you could see 382 more likely, but point 0.5 is most likely like going to be where most of them top out. Now, obviously certain sectors or, certain specific assets or whatever is going to be a different situation. And in both directions, some are going to be more bullish retracements and some are going to be, more bearish retracements. But I think it's more likely than not at this point in time that, essentially like the altcoins of the traditional markets are going to get wrecked. And like, the Bitcoins of the traditional markets, are going to do like a little bit better, but overall going to be in a downtrend. So, but that's my overall opinion. I think we're going to see very soon, the lasting effects of all this, are not just going to go away. And even after everything does go back to normal, it's never going to be normal again, because like human behavior is going to be have been changed so much by all these events. Like people are going to be much less likely to go out and spend $7 on a coffee and $100 on dinner at a mediocre restaurant. And people are learning how to like cook and spend time with their kids and entertain themselves like on the cheap right now, and that they don't need to be like rushing around all over the place nearly as much. If they're not spending as much money, they don't need to work as much. And I think we're going to start seeing like basically like that kind of pullback in human behavior. And as people essentially get like more used to using like technology and everything, and like even more like immersed in online shopping and food delivery and all the different like amenities that essentially are starting to emerge or have been emerging over the last few years, and start like taking advantage of those. I think we're going to see like a complete shift in like the markets and the economy and everything. So I think it's very unlikely that a lot of these companies will survive. And I think essentially what's happening right now in the United States is the nail in the coffin for many of these businesses, as they take out like loans and basically like shoot themselves in the foot, because they're already like they're basically like already in trouble. And you're offering them like a helping hand, but it's not really a helping hand. Like it's basically just going to put them in worse shape. Like for instance, if you take like a deferment of any kind of payment, if you try to refinance like in the future, there's specific like question on there: have you like deferred any payments in the last like 6 months or 1 year or 2 years or anything? And if you have, like, you're immediately like ineligible to like refinance. So you may like defer a couple payments to save a couple bucks and alleviate like an initial stress on like your mortgage or your car or whatever. And then down the line you go to like refinance your house or something like that, and you lose out on ridiculously low mortgage rates, all because you saved a couple bucks like deferring some payments. So and of course they don't tell you all that stuff. And as you see now, like all this stimulus stuff in the United States that was designed to help out all the people that need it the most, like typically are going to be the ones that don't have like the direct deposit bank accounts, and are going to have the hardest time getting this money in their hands. And it's very unfortunate how this is working. Like, I feel bad for the people that make under 70,000 a year that are supposed to get this $1,200, and basically are struggling to try to get it, because basically it's there's going to be so much stress on the system in the United States right now, because what's going to happen is they're like, okay, you can't evict people for not paying their mortgage or their rent or whatever. So then they don't pay. So then the people who are supposed to be collecting all these, might have like 20 properties or 50 properties or 100 properties. So nobody pays them. So now they can't pay, the bank for all their loans on all their properties that they're renting out. So now the bank's in trouble. So now the government's essentially saying, oh, don't worry about it. You don't need to have like the money to back up all these loans anymore. So you can loan out more money, than you were able to before, by another like 10%, because you don't need to keep that 10%, in your reserves anymore. So you're essentially like saying, oh, like you're encouraging basically a bank run by saying now these banks don't need to have anything in their vaults. Like, they don't need to have any collateral. So it's a very slippery slope that we are involved in right now. And I'm still not convinced that, the people on top have the best interest of, society or the people on bottom in mind. So it's very crazy times right now. And, as long as I've seen this coming, and a lot of this is played out, and I've spelled out a lot of the price action, as well as like, what's going to happen like with the economy and everything. And yet even anticipating this for like years and seeing it slowly unfold, and, even like making some of my predictions about the stock market, 6 months, 7 months ago, a little bit before it happened and everything. It's crazy now that it's actually all happening, and seeing it all play out. Because I still don't feel like I'm prepared. I still wish there would have been like a little bit more time, or if I would have just had like a little more money saved up, or whatever. And you're always going to feel like that, but I can only imagine what the people who are like not prepared at all must feel like. The people who literally just bought a house, or just got a brand new car, or just took on a bunch of unnecessary debt. It's crazy times right now. So we'll see how it all folds out. I'm not going anywhere. I'm here with the daily updates, and I'm always here to answer questions, and available to work with the community to help out in any way that I can. And I know there's professionals of all different scopes, and people with all different skills in the community as well. And I'd like to build it up over time, as I'm able to dedicate a little bit more of my time and energy to the channel and everything, to essentially build like a strong community where we're essentially like have a solid backbone of our own, and we can work together to create valuable assets available to each other. So and that's part of what the trading course that I'm planning on giving away is all about. I'm working on that currently, and that won't be much longer, honestly, down the line, and I'll have that out for everybody, and I'm very excited to offer that to the community. And it's going to basically like alleviate a lot of the questions that people do have about some of my like typical strategies and indicators, and what I explained in the video. So I think basically by going through this course and everything, you'll have a very good understanding of like Fibonacci and moving averages, and like the essentials that you need, candles and chart patterns, whatever, to basically just like follow along and be up to speed, and then start being a valuable member of the community. Not that you're not already, but just to make sure that everybody has that solid baseline, like initial education, and then we're building on top of that. As opposed to like that sand foundation, and every time we try to erect a structure, it just crumbles into the sandy weak foundation. So yeah, you know what I'm talking about. Anyway, that's it for today, guys. Crypto Trend Trader. What we're looking for as far as targets. We have a few levels in mind, and quite a bit of excitement in these markets lately. But nothing has changed as far as the long-term scope, and I think it's very important that we keep a level head here. And remember that in all actuality, like this is the third time now. What, 7,000 basically, 7,064. Like it's been basically like chopping around in this area forever, and it's like everybody's getting super bullish, but like how much higher did the price action really go? Like we're up a couple $100. Like it's not that great. And then people are talking about, this is another thing about statistics and how they can be made to mislead people. If you look at right here, we're down, that's 62%, okay? but people are trying to be like, oh yeah, we did drop 62%, guys, but we're back up 91%. So we're actually up 30%. No, it does not work like that, because it works like that if like you sold the top and then you bought the bottom, but if you were in this and it dumped down here and then it came back up, like, you still need price to rise another like 35% to get back to where you were at. So keep that in mind when these people are talking about, essentially like statistics and the way they spin it. And if you have like a regular TA guy that you follow, and you feel like he's always wrong about his TA, maybe it's time to start thinking twice. I hear a lot of like the regular big TA guys in the space, like, essentially coming on, and they like, first 5 minutes of their video is basically them like trying to talk you off like the edge, explaining like, guys, I've been getting like a lot of messages lately about how everybody's been getting wrecked and you lost 50% of your account, and like, I've been there before, man, and just remember, this is not financial advice. I'm not telling you what to do. Like, this is just a guy on the internet. Like, man, be careful of people like that. They're out here like basically, I don't know, whatever. I'm out of here. That's enough for today. Crypto Trend Trader. Have a good one. And I'm out of here.